Losses extend in WTI futures and actually touching 3-month lows in the process, largely due to ongoing dollar strength combined with Delta variant concerns and new news out of Japan that the COVID count now is 10 times higher than it was just a month ago, continued and expanded lockdowns in both Asia and Australia. Not to mention in U.S. news that the fresh COVID count has hit a 6.5-month high as of yesterday. Also, it's important to note that FGE reported that estimating Asian demand for oil in August down about 1.2 million barrels a day. As we get into the meat of the session today, futures trying really hard to stave off 7 days of consecutive losses, which would be a record going back to 2019. Some data points, the crack spread touched a 4-week low today. Descartes Labs came out and talked about global gas demand down for the third consecutive week, down 1% week over week. Also heard news that global airline traffic is down 64% right now compared to pre-pandemic levels. And on top of that, we had a Baker Hughes rig count that came out around noon today Central Time. Rigs were added. It was 405 versus 401 consensus and 397 last week. So that would be a gain of 8. So going on to the CME Group CVOL, looking at options volume and looking at volatility. Right now, the October curve is trading about the 55th percentile judged on a 1 to 3 month basis. At-the-money vols are higher. Up variance and down variance are both higher as well, although the up variance is up more, so that would infer that the skew is higher, which it is. Biggest volume on the call side, 63 and 64 calls. On the put side, 6,000 traded in the 60 puts alone, followed by a drop-off in volume around the 62 and 63 strike. And lastly, need to note that WTI CME micro mini futures that were listed just less than a month ago continue to improve in volume and open interest and liquidity.